Hey everyone, Alessio here from BG Trading, and I hope you are well. Today is February 15th, 2023, and I want to talk about CPI numbers last night and also how that is supposed to affect our market here for the incoming weeks. I'll be analyzing the SX 200 and my expectation for the incoming weeks here in Australia. So let's have a look. I just want to remind you, this isn't a financial advice, it's just us from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, and much more, all in this channel. So if you like, please subscribe, and also like to invite you to become a member of our free Facebook community. We call that Buy, Grow, and Sell Strategy for Share Traders. We put a lot of content, stock analysis, and we have a great quality conversation with our members in that. So we'll be putting the details at the description below. So the CPI in the US, which is the Consumer Price Index for January, has indicated a year-on-year increase of 6.4%, which rise was slightly higher than the expected increase of 6.2% among the so-called analysts and the economists. But on the flip side, it was slightly lower than the increase of 6.5% reported in December 2022. So overall, I would say that the CPI came up in line to the expectation. I just wanted to remind that we had December and January, which was a holiday period, a lot of people spending a lot more in gifts and travel and everything. So it should come down now. And obviously the effect of interest rates hikes in US has now shown that inflation are lining up and are currently reducing on a monthly basis, which is exactly what we wanted to see. So for me, this was a neutral result, and the market should keep moving as itself. Here in Australia, on the other hand, we might going to recession as RBA continues to increase the interest rates. Now, if that happens, obviously you're going to have a short-term effect on the stock market, but it's still unknown. Tech and growth sectors, stocks are still tipped to be the ones to outperform and to do well during a recession. But I just want to remind that normally during recession, materials and energy stocks tend to underperform. And if the recession really hits, we might see a decline in iron ore stocks and also in energy stocks. Okay, although this is we normally talking about worldwide supply in. That's why we really consider US inflation metrics a lot more than Australia. So now the SX 200 is undertaking a correction, which is something that is not very good, but it was expected. So in line to our expectation, we hedged our portfolio with BBRs, ASX BBRs. I have mentioned many times that during correction, when the market is at the peak, we normally like buying BBRs for that particular reason. And sometimes, obviously, during correction, stop loss is a very powerful tool. And we never know exactly how low stocks can go during correction. So we use the stop loss to protect capital and also BBRs to take advantage of the correction. But mostly importantly, we offset the value of the portfolio. So some stocks fall even in the stop loss, but then obviously the BBRs, the hedge that we've done, also helps to keep the value at the minimal decline. And then, most important, we take advantage when the market is low and a lot of stocks are trading back into a technically discounted price. We even buy the same stocks for lower prices and then take advantage of the rally. So that's the way to mitigate the risks here and minimize losses via hedging the portfolio. Obviously, stock market not going to keep going up continuously. It goes up and down. So now in terms of percentage, so we had this really strong rallies back in October, November 2022, and then we had a continuation of this rally. Then it was 15%, and then now 9%. So that's obviously reduced a little bit. Really good January, and then we had this correction here in between of 6%. So correction of 6%. I'm gonna pinpoint this red so you can see better. Now, if that repeats, we might see at least 5% correction from the highs, which brings the ASX 200 back to 7,200 sort of level. So now, not expecting any rebound until March, until mid of March, as per this chart formation assumption. So, which means we're not going to be topping up just yet. We wait, we take some stop losses, we try profit out of the BBOs, the hedge, and we keep some exposure in the market patiently, even though some of the stocks will be low. But we want to still keep positioned into sectors that could do well and sell the higher risk stocks and keep position on BBOs. So once we have the first signs of reversal, then we sell BBOs and start entering into new positions. So that's the plan here. Hope that makes sense. Let us know what you think, and I'll see you in the next video. Thanks. We really hope this course will help you to make better decisions and make successful trades. See you in the course.